All right. Good evening, everyone. Good to go. Thank you, Lorna. I'm sorry, everybody. I do not have as smooth as a voice as Daryl does. Excellent. All right. I'm glad everybody's here. All right. Let's kick this off. So, those of you that don't know me, my name is Cody Ashmore. I am a director of weekly option strategies, obviously, here at Simpler Trading. And what I really want to do here is just touch base with you on how to put time to our advantage when trading index options and both options on futures as well. All right, so here is a brief trade example. So you can see what I really want to draw your attention to right now is just the time that I entered the trade. So you see I entered at 8:39 and then got out that afternoon. I sold it for 210, locked it up at um, at 40 cents and then making 2% of my NLV, which was at the time $850. All right, so tonight's webinar, what I want to do is show you how I've been making a consistent 1% of my NLV in the first 30 minutes of the market day, how to put time on your side, and a day trading strategy for those who cannot sit in front of the market all day. And we really should just change that to put time back in your life. And the reason I want to say that is because when I place this trade, it gives me more time. Just a brief example, just the other day, I saw the setup, I entered the trade, I grabbed my kids and we went to the grocery store. Actually, before leaving, I set in my stop loss order. Can't always forget that. And then we went to the grocery store, got what we needed, came home, and then I saw that I was at 80% of my credit received has been accumulated. I locked it up, which equated to 1% of my NLV. And then to celebrate, grabbed my kids. We went to Chuck E. Cheese and just had a great day. For the we had a great time for the rest of the day. So I know 1% a day doesn't sound very attractive or lavish or exciting, but think about it. If you can make 1% a day consecutively and consistently, you could potentially double or triple account a year. It all depends. Obviously, the market throws curveballs, but there is a method to the madness. So you may be asking, why is this important? And who's this for? So why I want to show you this. This is a low risk way to trade options. Your setup is done in the first hour of the market day. Low capital requirement. I have actually started doing this trade setup on a $2,500 account, and it allows you to take advantage of the new SPX index options as well as the ES futures options that have been expiring every day. So, current market conditions. It's no secret. We're in a bear market, and the bear market has been leading to very large volatile swings overnight. And having overnight risk has been a tough pill to swallow for many swing traders. And honestly, most of the professional swing traders or professional traders that I know have all shortened their timeline. They're either swing trading for 1 to 2, 3 days out, or they're all actually just day trading in general right now. And I just want to pull up a chart real quick and just show you exactly what I mean. All right, so here's a day chart of this XPX. Say we're in a bear market, you have these huge 10% rallies. And then if you weren't positioned for this, say you were short, thinking this was going to go down, this is going to chop you up. And then guess what? You're going to get smacked back down. Or you need to be really good on your entries. I don't know about you, but I missed this short entry. Why? Because it rallied up here, then it gapped and flushed down hard. And at that point, it seems like you're chasing. So then, like, the setups weren't really working, I guess, in these conditions. You could also you get chopped up. These ranges right here were 2 to 3% range days getting chopped up. Just wasn't working, but was working here. My swing trades weren't working, but my 0 days to expiration trades are working. So that being said, this is how I adapted to this new market condition. Get that out of the way. All right, back in business. All right. So how did I come over the strategy and why this strategy? So what how it all started is I was selling 90 to 100 days expiration options, And then you would think it would take a really long time for those options to expire. But what was happening is if there was no price movement, I was collecting 50% of that credit received. 50% of that credit received within 30 days. Now, if you had, if I was right on market correction, then I was actually closing those trades within 7 days. So then I was like, well, hold on a second. How can I take advantage of this? And it was a really big eye opener. And so I started doing a little bit of research, back testing, and started to develop a plan on it and started testing it. So, like I said, the moves are happening quicker. With the around this time frame is when those days, the options that are expiring every single day. Forgive me. Whenever I saw that was happening, I landed away, try to get 90% of it in roughly underneath an hour of work. So now what is the result of all this work I've been doing? All right, so starting with $25,000, I grew it up approximately 60% over 3 months. And you can notice that it was fairly consistent. And I actually had a pretty good streak, just cruising on up. And despite, for those of you that do know me, I am not perfect. I did get a hit, and then we started getting a decline. And then I'm like, okay, what is happening? And I figured it out, and we're back up to the races. But nonetheless, losses happen. And but that is very just to show how consistent it has been for me. Now, through the rest of this presentation, I'm going to go ahead and highlight a few of these trades and show you what it's done for me. All right, but before I dig into all that, let me tell you about myself. I'm from Portales, New Mexico, small little town. My trading expertise, I do enjoy trading spreads. I do also trade around the dark pool. I do find institutional order flow. And when I find the right setup, like a directional, but my main hobbies really are just hanging out with my family, getting the kids outside, do a little bit of firearms training here and there. And before I talk about my professional experiences, I'm going to go to the next slide because it really just ties it all together. So my journey into trading. This is right here, young little Cody. I'm about 18 years old in Iraq right there. So what happened is when I was in high school, I enlisted in the Marine Corps, became a rifleman, did my tours in Iraq and whatnot, and on my way out, I became a paramedic. Worked as a paramedic some, was a flight medic as well for a little bit. And then what I ended up doing is tying this all together. And what I ended up doing was, like I said, tie it together. Then boop, boom, boom. I was a tactical medic as a contractor in Afghanistan for several years. Now, this is when I started trading. So it all started in 2015. I was in a location that is deemed as a high threat location by the government, and the internet was blocked. You The only time the internet was available was at certain times of the day, and all it was available for was very spotty Skype conversations with your family. But I wanted to learn how to trade mainly because my first son was on his way into this world. And I did not want to have to be gone all the time. And just like now, you want to know how to provide a living for your family. So now I wanted to learn how to have my money make me money. And so what I did is I had to pay a local Afghan to go out in town, get me a Wi-Fi hotspot, right, little hockey puck looking thing. And I would give him US dollars, and he'd put data on it for me. And then I would have to just learn from the spotty data that I could get from the mountains. And so while I was there, I'm learning, and then I'd run the data down, I have to flag them back down, get them to refill it. And so all that being said, and the reason I even mentioned that is because if I was learning this skill set in a very difficult situation where I was having to make it work, I imagine many of you here also have a full-time job, maybe even two jobs. Go to a job you don't like. It doesn't matter. Everyone that is trading is literally just trying to find a way to make it to where all they do is trade and answer to nobody. So if I could learn to do it in those situations, I believe you can get there too. And then so from there, I also did start trading for a prop firm in 2016. I got a relatively decent at swing trading, applied to a prop firm. I was even overseas on a Skype interview, jumped through all their hoops, and then ultimately I've been trading their money since 2016. I developed a small internet presence, and one had one crazy idea, got noticed by Simpler. Next thing you know, here I am hanging out with all you. Those of you that are familiar with Odessa, Texas, and Midland area, this is Aero Carrier 5. That's me in the little window coming in and landing on an oil rig where we had to do a scene call. But, you know, just to tie it all together as far as where I have been in my life. So let's get back to the strategy. All right. So it's day trading for swing traders, really. It's intraday swing trading. If you're a day trader, this strategy adds an easy opening trade to your arsenal. You're already day trading, you're already prepared for the day. But if you want to place a day trade where you don't have to be always right on direction, this trade is just for you. But if you're a swing trader and you're a swing trader because you don't have a whole lot of time in the day to stand in front of the computer, or you just don't like standing in front of the computer all day, that's fine. Because this strategy is requires mainly 30, 60 minutes of the day. And it's at the beginning of the open, and you literally do it just on a part-time basis as well. So we've all heard that options, when you're buying options, time is against you. And statistically, last I saw on the internet, anyways, is options about 80%, 82% of the options expire worthless out of the money. So instead of buying options, looking for a quick move in the day, which is great, don't get me wrong, that is a great strategy to do. But what if you want to take the other side of that? What if you don't want a big move? And statistically, also, they say that the market is mainly range bound, except for the last few days, obviously, or the last few weeks. But statistically, over time, it is not moving in a ginormous way. And now, so what if you can take the opposite side of that and just have the benefits work in your favor? So sounds pretty cool, right? So here are the benefits of the strategy. And this is just an example. The further that time gets away from you, or the further time that goes, actually, your break even gets further away. And instead of this, having this slide up to give an example, I'm going to literally show you a trade that I did today. The market was up big, right? If you were short swinging, I'm sure you got smacked in the face. It was not very fun if you were short, I would say. But let me point this out to you. So the market popped up, and guess what? I still sold calls. I actually did. I'm way out of the money up here. And what I want to point out is, you see how the market just went sideways after the pop up? I still closed out my profit at 90% of the credit received, and I have no overnight exposure. And however the market opens up tomorrow, I don't care because I have no exposure to it. So just a visual representation as far as how even things go sideways, it benefits you. It could go your direction, you're good. It could go sideways, you're good. It could even go against you slowly, and you are good. So with every single strategy that you ever trade, it should be back tested. But granted, back testing software is difficult to come around, it's expensive, things of that nature. But luckily, I got a hold of some back testing software. So the back testing parameters to what I'm about to show you. I use SPX, the dates from April 1st, 2020 to December 31st, 2021. So why did I do that time frame? Mainly because the limitations of the backtesting software, you could only pick one option strategy. So I wanted an option strategy, or sorry, a time frame that had the longest trending market, but post-COVID when volatility was high post-COVID. So April 1st to December 31st is what I chose for this backtesting software, or for the backtesting test, I guess is what I should say. So, like I said, they're entered every day. They were selling the Delta 10s. They were opening trades no matter what was happening in the day at 9:45 a.m. Allocated 50% of the portfolio. That's just something that's a put there. That is not required per the strategy. So don't let that worry you. That's just what it has to put up there. Exit conditions. It either expired worthless or you close it at a 200% loss. So what were the results? So, and I also want to point something out that is not normal in most backtesting software. This specific backtesting software actually tests when it runs the numbers, it crunches it by every, I believe, 5-minute interval over all options. Most backtesting software only gives you the price at the end of the day. They only know the price of the option at the end of the day. This one could specifically tell you what time of day you would stop out according to that. Now, so pointing this out here, you have a win rate based off of blindly entering that position no matter what, every day at the same time, no matter what was happening in the day. You had a win rate of 73.9% win rate. And your P&L is roughly $60,000. And based on a $100,000 account, that is 60% return. And that is just blindly entering those trades. But let me show you how this played out in real life. All right, so we're looking for consistent gains. And I developed this strategy. I wanted something that would make me 1% a day each day. And while it doesn't seem like a lot, it has a huge compounding effect that could really grow your account. So, but let me elaborate on that a little bit and how I used to trade before I started doing this 1% thing. So the way I used to trade, I still had a goal of 5% a week, right? So whenever I was trying to get my 5% a week, I would have 5 swing trades on that would have 10 to 14 days of expiration. On the following week, I had exit parameters about entering new ones. So you're just rolling 5 trades every week, right? Just trying to knock them out, trying to get your 5%. But some trades are winners. News would come out, uh, crazy analysts, anything could happen, right? To mess those up. But what if now you could gain your 1% with no overnight exposure? You have your setup, you come in, and you'd be done with it. But ultimately, just looking to grow the account as well. So here's another trade example. Another thing I want to note here is came in again at 8:38, close it out a few hours later, came in and made my 1% NLV. And only from a little bit of time is what I'm trying to put out there. And all I did was close the short option and let the long leg expired. Worthless. Now, high win rate. What I want to point out here is my win rate is higher than the back testing. You may be asking, well, why is that? Well, that is because that back testing only blindly entered those time frames or entered those trades blindly every day, no matter what, entered those put credit spreads and that back testing. But what if there was a way you could tighten it, think a little bit, and make it work to your work benefit for you? But I was very shocked to see how well it worked, and I was actually beating the back testing, so that was all great. So, despite what a lot of y'all know about me, or those of you that do know me, I am not perfect. I do have losses every now and then. But here's an example. I did get into the trade for $2 and I stopped out losing 1.5 of my NLV. And the main thing I want to point out here is that there are risk parameters in place to contain your profits, your capital. There are risk parameters. Every trading strategy should have it. And all that being said, that's what a losing trade could look like. So, why zero DT trades or days expiration trades? This is an out of the money strategy. And like I mentioned, about 82% of all options expire out of the money, worthless. And there are people buying them. So why not try selling them? If you have a strategy where you buy them, that's great. But sometimes, it's cool to take the other side of that and just let it work. All right. So here's another trade example. The main point of this trade example that I want to show you, and yes, it is 2% of my NLV. Reason being, if I have strong conviction on a certain area or a certain thought process or direction, you could swing a bigger bat. In all honesty, your profit potential is based on how much risk you are willing to accept. So, this being said, I did choose to accept more risk. But the main point here is this is a trade done off of some economic news. I expect the price to basically, in all honesty, what this was is placing a bet that we don't close the gap. So this is when the FOMC raised rates by 75 basis points. Market didn't like it. Market collapsed. Do you know what? I'm going to come up here and sell these calls up here and move along and let someone else buy them from me. And this is just a trade breakdown. Like I said, FOMC just raised the interest rates by 75 basis points, as strong conviction to the downside. I decided to double up and take advantage of the movement. All right. So another way you could trade this methodology, the TTM squeeze. It's available on almost every single trading charting platform out there. So that being said, here's another one. You could use a squeeze to help you pick your market direction. In this case, I went in for another 2% NLV. I sold it for 205, closed it out at 40, and I entered this one. Well, actually, there's one more thing I want to point out here, just to show you how quick this could work here. This trade right here, I want you to pay attention to the time. I got in at roughly 9 o'clock, closed it out 15 minutes later. In and out. All right, show the squeeze. Like I said, come in at 8:30, out by noon. All right, so what if you don't want to use any of those technical indicators? You just want pure price action. Here's another example of one. Came in at 8:34, 8:36. See, I scaled into position on this one, locked in 1.5 of my NLV. So scaled in, locked it up an hour and a half later for 20 cents, and made 1.5 NLV, equating to $475. So, and if you are new to trading, then I would imagine, or even if you're learning to trade, I would imagine you have a smaller account. That is most people's explanation or situations, is what I'm trying to say in those cases. So, what if you have the pattern day trading rule hovering above you, going to keep you down, and you need a way to get around it? There's a way. You could trade ES futures options. The PDT rule does not apply to ES futures options. So therefore, you could come in, sell it, do the same strategy, same setup. You're just going to do it in a different product and trade it out that way. But if you don't have a PDT rule hovering above you, that's great. Just trade SPX index options. So there is a way to do it in a small account. Like I said, I'm personally doing it, and I started off in a small $2,500 account, and I do it in my ledger accounts as well. So here's a trade example of the small account. Like I said, just do the ES futures options. Granted, your win percentages are a lot higher. Why is that? Mainly because the amount of credit received based on the amount that you have is larger, just the way it is. But I obviously came in with 2 and then locked it up for 5. And in at 8:39 and out shortly after. Not a bad little trade. Here's another trade example. This one, I actually waited a little bit to get in. I almost waited an hour. But I came in at 9:20, closed it out into the afternoon for 10 cents. Granted, it could have been closed a lot earlier, but those 10 cents are going to hold on until the end of the day. But came in, locked it up for 10, made my 1% in LV. All right. So, what if you don't day trade? If you don't day trade, that is great. I came up with this strategy to complement my swing trading. And if you don't know, I'm the dark pool guy at Simpler Trading. Well, I'll follow the dark pool, try to read what the institutions are doing. And I haven't given up that trading strategy. So all it does is complement my current trading. But I will say this is currently becoming my favorite strategy. And if you're curious as to like why is this becoming your favorite strategy if you do the dark pools and you have a whole other trading setup, I will tell you why. Simplicity. There is no scanning required. There is no overnight exposure. There is, it's very, you just come in, you have one trade, one setup, one product. You come in and you place your trade. If you're familiar with John Carter telling the story where he mentions how one of his mentors would only trade one product with one trade strategy, she would see it, enter her trade, set her stop loss, and he and they went into the garden. This is my version of it. Like I'm contemplating almost giving up the whole other trading strategy and just moving to this because it requires freedom. But if you don't day trade, you just but yeah. So skewed risk to reward. So with a high win rate comes a skewed risk to reward. The market is almost a sum zero game. If you want high probability, you're going to have to risk a little more. That's just the way the market works. But like I showed you earlier, that is why we have risk parameters in place to protect your capital and prevent any large losses. And you maybe asking, do you need any special indicators for this? And the answer is no. You could literally do this with pretty much anything. Or all you could add this methodology to your current trade setup. It really doesn't matter if you're only a Squeeze Pro trader or Taylor's new Big Three indicator. You could use that. Maybe Sam's trade bundle or indicator bundle that he has if you already have it. So the point is there is no magic indicator to tell you what to do. It is a methodology that you could add to your current chart setups that you have, to your current trading plan to help it all work together. So my personal goals with this strategy. So my goals for this strategy, I have 1% a day. I intend to double, triple, as the years go. I do it in my IRA, personal accounts, grow them. You can have multiple goals, if you will. But my goal is to go ahead and just grow my IRA. And the reason why is because hopefully by the time I'm older and retiring, that account is at a decent size. And if you can get it up to a minimum, if like you think about it, if you can grab 1% from a simple $100,000 account, that is $1,000 a day potentially, right? And my only goal is to make it to where I don't have to, where I could retire in with ease, I guess is the best way to come about it. But that is my goal there with a specific strategy. Grow my IRA or other accounts too. There's really the possibilities are endless. Basically, if I want some money, I'm going to grow it, and that's where one way I'm considering doing it. So, trading is about adaptability. So, like I mentioned earlier, I do trade around the dark pool, and my swing trades last anywhere, or they were lasting anywhere from 10 to 14 days. But in the previous market, that was good for that time frame. That's my sweet spot. In the current wider swings, those I'm getting chopped out, honestly, or I was, and so I had to change. And like in life, I needed to adapt and overcome. So this is how I started coming up with this strategy. My core plan wasn't giving me the results that I was used to. These new options were starting to be put out there, and now I've taken advantage of it, and this is what I'm doing now more often than my dark pool information or dark pool trades. All right. So, what have we learned? We have learned that hopefully how to take advantage of these 0 days expiration options, how to put time on your side when trading the options, and better yet, how to potentially add time back in your life. That is, I think, the main goal that everyone wants here. Everyone wants to know how to trade and have financial freedom. That's what I believe everyone strives for. And you have potentially also a day trading strategy for those who can't sit in front of the market all day. Say you want to be a day trader with minimal homework. What I mean is like scanning. Is there enough volume? Is there a catalyst to get it to move? You don't need that type of information when it comes to this particular strategy. I literally wake up, look at the market for about 30 minutes. All right, get my thesis, and I trade my thesis, place my stop, and that's it. But since this is such an in depth conversation that requires more discussion, I will be offering a drama free day trading class where you could obtain potentially 1% of your NLV on August 20th, I believe. Let's confirm. Yep, August 20th. So there are three packages to choose from. First one, if you just want the class, that's great. You go ahead and get the class, which is the basic bundle. Or if you want the pro, which will give you 4 live trading days with me, and then if you wish to get the elite, you'll have a total of 6 trading days with me. Now, I want to point something out. We are doing more than just typical 2 days, 4 days, if you're familiar with the simpler trading um, format. So we're going to offer 10 days, and I'll get a little bit more into that as we continue on. So like I said, August 20th, I'll be giving a class and to show you how I have been consistently making that 1% uh, a day consistently. But say you take the class and you want to look over my shoulder. I will be taking these trades every morning. You would be looking over my shoulder. You can see how I'm analyzing these trades. You can see how I am entering these trades, and we will do it for an hour on the August 22nd, 24th, 25th, 26th from 8:30 to 9:30 Central. So it's just the morning trade. Like I said, we'll come in, quick market analysis, decide our strikes. After we enter the position, discuss stop losses and trade management. And then after that, there's going to be a slight break. And why the break? I requested to have a break on this simply so you can go out and trade this on your own. And I imagine you would have roadblocks in your way, or say a question develops that you don't have currently as we're doing this. That's great. So we'll come back after you trade it yourself. Oops, okay, yeah, there we go. So here are the days, like I said, and you will get the alerts to your smartphone as well. And then, so the elite package where you get 10 trading days with me, like I mentioned. So you'll have a little break, a chance to go trade it on your own. And then you can come back. If you have questions, feel free to ask. I'm all about helping you. I like if this is the last thing you need and you're off on your yacht doing your thing, I'd say I succeeded today. But like I said, an additional 6 days, same times, same plan. Market analysis, strike selection, entry. We'll place our stops. And as far as trade management goes, say I decide to lock it up earlier or anything like that, alerts would go straight to your smartphone. And if you're interested, PayPal offers zero interest on if you wish to pay it out over 6 months through PayPal. And once again, here are the packages. You have the basic for just the class, the pro if you wish to take the class and look over my shoulder for 4 days, and then say you like, oh, you know what, I need a little bit more help. I like to see how he's doing. I like to look over his shoulder a little bit more just to see how he's doing it. You can come back, get the elite, and have an additional 6 for a total of 10. So now I'll be more than happy to answer any questions. We can, as it says at the top, we could do this together. If I can succeed, you can as well. Let's see here, I'll pull up the questions. Okay, so the awesome support group that we have here has been logging all your questions for me, and I want to go ahead and start reading them out loud. And that way you can get your answers and maybe clarify a bunch of questions y'all may have. So, can I clarify what 1% NLV, 1% of NLV means? Is that 1% a week? So if I have a $100,000 account, what does that equate to? 1% NLV is 1% of your account. So if you have a $100,000 account, 1% for that one day is $1,000. So if you got, and if you're going to equate that to a weekly perspective for that question, 1% a day, and say you just happen to get it every single day that week, that would be $5,000 that week. And let's see. I believe I just showed, okay, can I provide the P&L snapshot that shows actual wins and losses? And you're tired of hearing about these easy winning strategies that don't really work out. I covered that in the webinar, so hope that cleared it up right there. And now, do I use the quants? The quant pivots, I imagine is what that question is. I have used them before. And actually in the strategy, in the class, I want to show how to use it specifically across different type of trading strategies. And NLV, if you're still not sure what NLV means, that is net liquidating value. So that is literally the account balance that you have. So if you, like I said, if you have a $5,000 account, your net liquidating value is $5,000. So it's what your account is. And like I said, I have used quants before, and I intend on showing multiple ways on how to use these special indicators that are offered by Simpler and various places to help you create your thesis. And what if the market opens down? There's certainly a way to actually trade it. That's what's great about this trading strategy. You come in fresh and you pick a direction and you roll with it. And I see a few questions as far as like the trade. So let me give an example, like the one I did today. Okay, did today. Market is gapped up, right? What I did is I sold a spread up here. I sold the 42.50. Actually, hold on, correct me. Let me stand corrected. 42.25 calls, and I hedged it with another call of here, so it decreases your capital requirement. And you can see as it just moves sideways, this call that I was short just decayed and decayed and decayed. And then I ended up closing it out for about 90% of the credit received. So that is literally a trade example. But as far as picking market thesis, that's the subject we'll have to talk about during the class because there are variables in that one. All right, so yeah, like I said, if the market is down, how to do it, and then adjust from a losing trade. If the trade is losing, I have stop parameters. So basically, whenever I have a stop loss in place, I already know the amount I'm going to lose. So therefore, it's already predetermined, and I just take the loss. I don't try to get fancy and maybe roll it or whatever, anything of that nature. I've already accepted the loss. If I'm wrong, I cut it. And I do see a lot of questions about credit spreads. This is where it gets different. You're not just doing a credit spread. You're doing a credit spread over how can I say this? You're doing a credit spread. You're basically doing a synthetic short option but you're doing it in a credit spread in a form of making it not required as much capital extensive. So if you were to short an SPX naked, you're going to need several hundred thousands of dollars, right? But if you do it this particular method that I figured out, then it is actually less capital expensive or extensive, and then it is basically a synthetic naked option, but it's not really naked. If that makes sense, that's how I have figured out how to do it in small accounts and large accounts. I have done this in XPX in my small account, and that's just how it has found a way to hedge it. And so I do know I mentioned ES futures in here, and before y'all get this crazy idea, I just want to throw this out there to help y'all. As you see the question about stop loss orders, if you go out there and you're like, oh, I'm gonna go try this on my own before like really knowing what you're doing, let me just tell you this just to warn you. Um, ES futures options, you cannot place a stop loss. Just so you know that. Like there is some workarounds we have to do, but don't go and try to replicate this strategy without knowing what you're doing because you can get burned in that form. So just know that before you go out and try to do that. But you can do stop losses on XPX, just not use futures options. All right, so back to the questions. And let's see. Going through here. I do place, these are actual stop orders. And like I mentioned about as far as time, and when it comes to time, like I mentioned, I will have a thesis. I would enter the trade, and I literally place a stop loss order. And then like I said, I've already mentioned or figured my risk. So with my risk already decided, I will go ahead and just place my stop loss and then go do whatever else I got to go do with my life. Like I mentioned, I went to the grocery store. The one I did it yesterday, day before yesterday. I entered the trade, placed my stop, and then I had some other work to do. And then I took my kids to their grandma's house, ran a few more errands, came back home, and I was able to have my stop loss out and just work for me. Let it work for you. So that is how I did that there today or yesterday. Let's see, going through some more questions that I see. All right, can I use same money for stocks and futures, or they need to be separate accounts? That is broker dependent. And what brokers am I using? I personally use, as far as using this particular strategy, has been in Tastyworks. Thing to know about Tastyworks as well is you cannot trade ES futures at the moment currently on Tuesdays and Thursdays. They haven't quite added that yet. And then does it work in a common 401k? That is yes, because that is exactly what I am doing. And then I see a few questions about the trade setup. So the trade setup is we determine market trend for the day, right? There are several ways to go about it. We determine our market trend for the day. We determine our strikes, and then we enter it, and then we have risk parameters in place. So that is literally it. So we're not like the back testing just said, put credit spreads no matter what every single day, wham, wham, wham. No, we're going to think a little bit and increase our win rate. We're like, is today going to be a down day? Is today going to be an up day? How do we decide? Is today going to go sideways? Like it, those are a bunch of ways we're going to basically slice and dice this whole entire thing. All right, going back through some of the questions here. See, I want to see some common questions. All right, I'm going through. All right, so a lot of questions as far as risk. So for me, risk when it pertains to a small account. Let me tell you how I view small accounts. When it comes to a small account and risk, for me, I am looking for, I don't think in terms of percentage when it comes to a small account. I think in terms of dollar amount. That's just the way my mind works. Say it's a 2000 that $2,000 account I've been doing this trade in, and that example that I had right there, I risked $200. That is 10% of that account. Absolutely, it is. But if you want to grow an account, you have to put risk on. That is just that's just the way the world works when it comes to trading. You want to grow, you got to put some risk. But that was one I put on too. You could obviously decrease it, but I could only, and then I'll get a less win rate. But that's when I was getting aggressive. Admittedly, I had such a good win rate. I was like, man, can I get like 3% today? Like, how hard can I push this pedal down and go? Until I started hitting losses. Like, okay, let's pump the brakes down. When you're getting it good, you got to run with it. But that is basically the risk you take in a small account. You could do it with risking as easy as $100 in a small account. So, okay. All right. Can you choose to increase that 1% by risking more contracts than you would be doing if one develops good faith in methodology? And I will say yes. That is what I've done. So basically, the way this works is if you are okay with risking, we'll say $2,000, then you could potentially make 1,000 or more. It all depends on how much you're willing to risk, and that whatever you're willing to risk is what your profits will be on the flip side of that. So whatever you can mentally handle is what you can potentially gain within realms of your current situation as far as account size goes, obviously. All right, I see some questions as far as like if I'm doing a iron condor. I have tried doing these daily iron condors, and I will say I don't like them. And the reason being is because I like, so if you're going to do a daily iron condor, you are literally holding that position all day. And then when it comes to the, if you get, so based on my strategy, I have a market thesis direction for the day, right? I could be in the trade and out of the trade within minutes to an hour based on that. But if you're in an iron condor, you're in it all day. I prefer to come in, pick my direction, and then get out of the way and go, not have to worry about it. I have seen in some places to where you can do, or they would like to do iron condors, but for me, that's just not my jam. So I personally don't do it. And I see the question as far as it seems I have both selling calls and puts. Is that okay? And both. Yeah. So basically, like I said, if I'm picking market direction for the day and then I'm flipping it on the other side of that, or I'm getting on the correct side of it. All right. So going back through some questions. And as far as which squeeze do I look at, 5 minute, 15 minute to decide market direction? That there's a whole thought process that we'll have to break down on that. But there is that's in the class. There is a way to break it down, and it's on various time frames. Dan or XPX, it's ES futures or XPX. All right, let's see. And I see some questions as far as is it a manual exit or I set up the close when I enter the trade? So the way I have been doing it is I will, no matter what, set my stop loss order, and then I just let the rest ride. Because if I don't hit stopped out, then guess what? Then it's, even if say something happens and it shoots completely like for me, and then it's like I don't know, it decreases value super fast. Then I want to shoot myself in the foot and let it ride. So I usually just set my stop loss, and if I have to step away from the my computer and do whatever, then I will just check back on it in an hour or so. And then if I see that I've locked up 1%, I'll go ahead and close it out. All right. So this strategy is a little bit different in terms of risk reward ratio. You're risking two to make one to win a higher percentage win rate. That is correct than other strategies. They will make money even at 2 to 1. So yes, the strategy, like I said in the presentation, it is skewed. It is, you are risking two roughly to make one, but with that comes a high probability. So the numbers just start to play like I showed you in the presentation. Current run rates in the higher 80s, and I have had losses, but it's they're contained, and then you let the higher number of wins work out for you. Hey, no problem, Dan. As far as using market internals like tick, the ADD to determine market direction, um, I do at times, but since the way these are structured, they don't need to be monitored so closely. They could be pretty relaxed. Like today, I sold the calls, right, but the tick was at the highs pretty much all day. But even though it was at the highs all day, it still didn't affect me. See you, Nasir. Good to see you here, man. Let's see. I am doing Tasty Works. So you think I'm moving one of your accounts there? Seems like there. You can get some fills with phone. Absolutely. I haven't traded on Tasty Works, or sorry, not on Tasty Works, but Thinkorswim on my own personal stuff in a while. So awesome, Steve. Looking forward to you being there. The Trader G, yes, that is pretty much it. You see, as you pick market direction, you sell a spread that favors that direction, and you collect the premium. That is it, roughly in a nutshell. Fiona, yes, that is correct. And do I cover squeeze details in class? As that is one of the strategies that I use, and it is free on most platforms. I do cover the TTM squeeze on how to use it to help you pick market direction. Yes, and better yet, using the Squeeze Pro. I honestly use that one just as well because it does gear you up. It gives you a little bit more of a head start than the TTM, the regular TTM squeeze, but the regular free TTM squeeze works as well. Squeeze Pro just gives you a little bit more of a heads up. But yes, I do cover some of that in the course as well. I covered several variations as far as how to pick your market direction so you can better fit whatever you currently do. Indicators for the course, there are, um, you don't need any. So you don't need any indicators. That's what's the beauty of it. You don't have to buy something fancy. You just let me teach you this methodology to your current framework. Or if you don't have a framework, then allow me to show you how to put one together, and then you could use it all together. John K, do I see using this strategy in all market conditions? Yeah, like absolutely, I do. I see myself. And like I said, this is replacing my whole dark pool information. And like, why abandon the dark pool? Because you have to scan, you have to prep, you have to write levels down, you have to plan for it. Sometimes you're right, sometimes you're wrong. Like it could get shaken out and things like that. But when it comes to this, I have a clean slate every single morning. I put my thesis together. I enter my trade, and I'm done. And there are times when we don't want to do this trade. Like, don't get me wrong. And I, through doing this, especially in this market conditions, I have identified times when I almost stop out quite often. So then when these certain parameters are hit, I'm like, you know what, today's not the day to do this trade. I'm going to go do something else or manage some other things. So there is so we cover when to do it, when not to do it, things of that nature. All right, let's see here. Make sure I'm not missing anything else. And one question I do get quite often whenever I talk about this strategy, just throw it out there. You do not want to do it on the SPY, strictly XPX or just ES futures options. That is it. And if you start playing with it and you want to, say you're in a paper trader, you're like, all right, I want to do ES futures options, just to let you know. Say, for example, it says it's going to say you're going to get $1 of credit. You're actually only going to get 50% of the total amount of credit it says. That is just the way it is done, or how options in the futures do it. It's always half of the credit. So just be aware of that. And at any time of the day, cost, no, that is actually, you need to do it. It's preferably in the morning, because if you do it too late in the day, any type of the move that goes against you too fast, then it moves too quick. So typically, morning is the best time to enter. I say within the first hour at minimum. Anything past that, if the setup doesn't show up within that time frame, then we're just going to go ahead and not take the trade. So the minimum amount to use, so whenever I have had a $2,000 account doing this, but whenever I look at total account used, it's actually been using $1,300, so 1,300 total. So that may be the minimum amount to use, as long as you can get a margin approval in your account with that low, then it will work out that way. But yes, roughly about 13. And then we can also do, in the class, I have tweaks. So say you only have 1,000, there's going to be a little bit of tweaks you could do. It's going to work a little bit differently, but you still get the trade across. Risk parameters be a little bit different, but it still works. Let's see here. Today I sold calls, KB. Yeah, it was a call spread. Let me throw that out there. I was on the short side. All right. I see some questions to save some text in there. So the pro package has 4 live trading days. Elite has 10. Yes, they are all done credit spreads. And they're basically synthetic short options. Like I said, you're doing it in a form of a credit spread to minimize capital requirement. Because if you sold them just short, naked, then capital requirements is really huge. But there is a way to make it basically a synthetic short option. And that is what we're doing here. And so I see a few questions here about as far as how many contracts and whatnot. So, and as far as how many contracts, how do you get your 1% NLV? That, and as and other questions are, is like, well, what if the VIX contracts and we go back down? That the answer is simple. There, all we're going to do is get uh, more contracts, right? So sure, the VIX is going to come down. The amount of credit is going to be received is going to be less. But how we're going to adjust, we just increase our amount of contracts to receive your 1% NLV. Later, Nasir. Have a good night, sir. Yep. You could do it, Tom. You could do a single leg stop. So in Tastyworks, what I've been doing is I'll set a stop on my short leg. You can't do it on a spread, but you can do it on a short leg, because that long leg holds very little value anyways. So you can just go ahead and let it go. And there have been times when it gets super volatile, you stop out on your short leg, but your long leg actually counters your loss. So it's been crazy in those crazy volatile days. But yes. All right. See any other questions? How wide is your spread? So as far as spread goes, that depends on how your current account situation goes, and that's something we cover. As far as there are variables as far as how wide it is. Hey, thank you, Greg. Thank you for being here. Rafting, good to see you, my man. Nasir, like I said, have a great night. See you in the options room. You want okay, KB, you're wanting a closer look at the mechanics of the system. Well, the system is really that simple. We have a market thesis. We enter the other side of that market thesis via a credit spread, and then we have our stop loss, and we let the rest work out for us. That's really it. Later, Steve. Thank you for being here. That's right. These alerts that you're seeing above are for during the live trading days during the Pro and Elite packages. That's correct. So, say you do the Pro and you get your 4 days, right? We're going to come in that morning, get our market thesis, select our strikes. We will enter the trade. Then we will discuss stop loss methods. And then upon that, if I feel that I'm going to exit early or anything of that nature, I will go ahead and alert it to everyone that I am getting out or stopped out, things of that nature. Hey, welcome, David. Let's see. I believe that is most of the questions. Beyond the live trading, potentially there, Rob. As far as alert service go, I'm not sure what you mean there, Steven. KB, as far as account, I have no um, limitations as far as account being comfortable. Like I said, I started doing this with the 2,000 or even less. Trading that $2,000 account, I saw I had to tie up $1,300. Granted, that's not going to be that is my max loss that could happen there. But at the same time, like I said, there's risk parameters, things of that nature. So, um, but that is how much money was required or capital that was required in order to participate in the trade. And Arlie, okay, past the pattern day train rule. I did cover it in this webinar some. If you can't catch the recording, but it is you bypass the pattern day trading rule from trading ES futures options because, as crazy as it sounds, uh, futures do not have the pattern day trading rule above them. That's that question there. There's a whole discussion based on that. There's lots of variables as far as how we're choosing the strategy there. Jay, you're welcome. Trying to decide between basic and pro. What's great? You could try basic if you like it, then sign up for the pro. You could always sign up to upgrade later. Dan, it is regular ES. MES is a lot thinner. Its options are not as liquid, and I don't believe they have it every day, but I do know there's not as much liquidity. So regular ES features is what I have been doing. Realistic to believe I'll trade a $1 million account. Ah, that's tough to say. So say you're trying to get your 100K day there, KB, to get your $100,000 a day. I would say that seems a little. Uh, it's kind of swinging. At that point, you kind of need quite a bit of liquidity. That's to be a tough one. You might have to like scale in it various ways. But once I get a $1 million account and I'll try it out, I will let y'all know. NDX and RUT, I personally do not because liquidity is not as thick. And Rob, I see the okay. I've seen several questions about the small account mastery and will this be done in there? There are um, requests that have gone in to allow it to happen, but therefore there is some obstacles in the way. But we are working our way through them to potentially start doing it in there. But at the moment, we cannot do them in there. All right, well, everyone, have some faith, James. Have some faith. Trust me, I am quite stubborn. I am quite stubborn. So believe it or not, I can keep pushing. But that is pretty much it, everyone. Everyone seems to have asked the same questions there. If you're part of the options room, you know where to find me. I'm in the free room, Simpler Trading's free room, Monday, Wednesday, and Friday. If you have any questions, I'm in there from 9:30 to 10. Like I said, Monday, Wednesday, and Friday. And if you have any of those questions, feel free to hop on in there, and I'll answer any of your questions there. But thank you everyone for spending tonight with me. Hope you found it insightful, and I hope I see y'all on Saturday. Take care, everybody.